Today I will be going over how I would invest my money if I had to start over with only $1,000 right now. Let's get into the video. Hi everyone, my name is Zach and welcome back to Finance Bro. Before we get into the video, I'd like to ask you guys to please comment your favorite stock of the moment, why it's your favorite stock of the moment, and also leave a like and subscribe as it really helps with the YouTube algorithm. And in today's video, we are going to be using the WeBull platform, so if you guys are interested in using the WeBull platform or like what you see, go ahead and use the first link in the description. You guys can get 2 free stocks that are worth up to $2,300 when you deposit $5 on the platform. So today we are going to be taking 3 different routes. We are going to have a low risk portfolio, a medium risk portfolio, and then a high risk portfolio. So basically the low risk portfolio is going to be this one we're starting out with first, and here it is. So we have this portfolio and it is going to be including 4 stocks, only 4 stocks, and I would just basically spread out my money evenly throughout these 4 stocks. So the first stock that we would have in this portfolio is going to be Disney. So Disney, I actually made a video this week as well. I'm making all these videos prior, but about this is the only stock that you need in your portfolio. Obviously, I don't actually think that. That was just a little bit of, a little bit of a title to get you clicking, but honestly, this is my favorite stock at the moment. Disney is only worth about $321 billion, while we have things like Apple that are $2.1 trillion. Now Disney owns about half of the media, it seems like these days. It owns ABC, ESPN, Star Wars, Marvel, so many different media companies, and honestly they are way undervalued in my opinion. They have a P ratio of 75, which is a bit high, but I just believe that they are worth more than $321 billion at the moment. But obviously, next up would be Facebook. So Facebook actually has one of the best advertising platforms out of anyone in the whole world. So basically they do advertising the best. Everyone has a Facebook pixel on their website, whether they know it or not. Basically everyone uses this Facebook pixel in order to gather data about people. Whether or not you think that is good for society, that's up to you. But Facebook is at the epicenter of advertising, and they are only worth about $993 billion compared to Apple's $2 trillion. So this is a little bit more of a growth, but I see both Disney, Facebook, Apple, and VU that we're about to talk about as very low risk plays that will definitely go up in the future. Next up for this low risk portfolio, we are also going to have Apple, which is the most highly valued company, I believe, at $2.48 trillion. That's even more than I thought. It's only trading at a 28 PE though, which is a profits to earning ratio, and really you want it to be between 20 and 70, or 20 and 60 really, and they are sitting at about a 28. So honestly their value is pretty good right now, and honestly Apple is just one of those stocks that I just don't see tanking more than 10% in a year ever. But yeah, Apple obviously has been on a great run this year, but I still see it as a very, very safe stock that will have growth going into the years ahead. Next up, we are going to have VU, the final stock of the low risk portfolio, and this is going to be actually just a ETF that tracks the S&P 500. So the S&P 500 are the 500 best companies according to the S&P, which is going to be your Apples, your Microsofts, your Teslas, your basically everything, and they track those 500 best companies. So they have gone up on average about 8%, I believe, a year. In years past, or in the past like 5 years, I believe the average is like 14%, something crazy like that. So this is pretty much just for stability for your portfolio, but they do have major runs at some points. So obviously, this is a very good one to get into in my opinion. All right, next up we are going to have the medium risk portfolio. This is going to consist of 6 different stocks, and it's going to have some of the low risk stocks as well, because I think Disney, it does have a bit of risk, but when you make a portfolio you want to have some, you want to have a good amount of risk, but you do want to have those safe stocks that are going to guarantee you returns, especially with like a medium risk portfolio. So here we go. We have Disney. Obviously, we just went over Disney. I think it's undervalued. I think this is just something to kind of, balance our portfolio. Next up, we have Enphase. This is only going to be about $25 billion market cap, but it is the future of how, basically, it is the future of how energy will be produced in America, and it's one of the best companies in that sector. So it's run up all the way from about $109 all the way up to about $196. I think anything under $180 for Enphase is going to be good, but obviously, you might not be able to get that price ever again. But Enphase is just there, $25 billion market cap. Definitely could be doubling in the next 2 to 3 years. Great company. Next up, we have Tesla. Tesla is a bit risky as well, but honestly not too risky. If we take a look here on the day chart, you can see that Tesla kind of has a great support here at about $550. Obviously, it hit $900 off this massive run it had. But we are in a bit of a bearish trend right now. But I don't think Tesla really goes below 550. And people such as ARK Invest actually have Tesla getting to anywhere from $1,000 to $4,000 in 2024, I believe. So in just 3 years, if this were to go to $4,000, that would be pretty insane. But even if it just got to $1,000, that would be pretty much, not doubling your money, but close to it. So yeah, Tesla's in there. Next up, we have Corsair. I'm sure you guys are interested in this one. Corsair obviously had its massive run up to $43 a couple of days ago. I took some profits, honestly, and I bought back in here at $31. But I've been holding this for a while. They killed their last earnings, and they're in the red hot gaming sector. And this is honestly one that could be doubling within the next year or two, because their earnings are just red hot and they never really get to see any big bump from it or any bullish trend. But I think as soon as we get one more spike, I think people will get woke to Corsair, and then Corsair will start its bullish trend. But either way, this is still the medium risk portfolio. I think this is the riskiest stock in the portfolio, but can probably give you the best returns other than maybe Tesla over the next 3 years. Next up, we have Facebook. We already went over this one as well, and Apple. So that rounds it out. Basically, the medium risk comes from the Enphase, Tesla, and Corsair. Disney is a little bit risky as well, but Facebook and Apple obviously providing some stability. And here's what everyone wants to see is the high risk portfolio. So this is going to have 6 stocks as well. And this portfolio is going to contain, some very interesting stocks. So let's get into it. First up, we have Palantir. So I'm sure you guys have heard of Palantir. This is one that has some pretty wild swings, all the way up to about $45 at one point. And then, coming all the way back down to about $17. Had a pretty bullish trend recently. And this is a good one because they are both in the private sector as well as the government sector. And they have about, anywhere from 80 to 100 customers, and they could be growing as well here soon. Honestly, the trend is starting to be bullish once again. We had a bit of a correction here, and I really like this correction. Over the past couple of days, we have made a good support at about $23. We'll see if we can hold above that. But basically, this is a very good one looking about 3 to 4 years ahead. Obviously, this market cap is about $38 billion, so that's a good amount. But I can see this company being way bigger in the future. It's a tech company, so it's risky, but it could have very good returns. Next up, we have Facebook. Obviously, this was in all of my portfolios. I just think Facebook is one of the most guaranteed, stocks to double in the next 3 years to 4 years. Only a 26 PE, not even $1 trillion market cap yet. It's just good, And I just wanted a little bit of stability for the portfolio, so we maybe don't lose everything in it. Next up, we have SoFi. This has been a big one in the YouTube space as of recently. Obviously, it's been bouncing back and forth ever since its IPO, going from $12 all the way to $27, now chilling at about $16. It has a market cap of about $13 billion, and honestly, this is going to change the way that finance is looked at in America, in my opinion. This is just a very, very good stock. $13 billion. It could be a massive player in the finance industry, and it's at a very good level right now. It could go all the way back down to $14 to $15, but I'm pretty certain that this will start another bullish trend here soon. And this was all off of pretty much hype recently, but it's sold off, and I like what the price is at now. Fubo is a short squeeze candidate, actually. It's a heavily shorted stock. It's one that wants to get into sports betting industry, which is going to be explosive over the next few years. Sitting at about a $4 billion market cap. This one is one of the very risky stocks in here. But this thing could easily double to triple in the next year, 2 years, 3 years, or go down a lot as well. That's why it's in the high risk portfolio. Next up, we have Corsair. Obviously, we already went over this. This is for stability as well. I really don't see Corsair going below $30 again for a very long time. It's only a $3 billion market cap. It's just as soon as this thing gets the hype, this thing is going to double pretty quickly in the next year, in my opinion. Obviously, I'm not a financial advisor. If I say it's going to double, it doesn't mean it will. Next up, we have Nano Dimension. So this is actually my favorite sector for growth over the next 4 to 5 years. It's going to be the genomics sector. So this is a stock that is backed heavily by ARK Invest Cathie Wood. They have bought a lot of this stock, and it's honestly just doing really great things. Only sitting at about a $1.8 billion market cap. This thing could be at a $10 billion market cap within the next couple of years. This thing could it's really here for the most risk. It could go to $10 billion, which would mean it would basically 5 to 6x in the next couple of years. But it could also just crash and burn. So it's just, if you want to take the risk, it's there for you with Nano Dimension. But yeah, that's pretty much going to be it for the 3 type of portfolios. If we want to go over them really quickly again, obviously low risk, we have Disney, Facebook, Apple, and Voo. For medium, we have Disney, Enphase, Tesla, Corsair, Facebook, Apple. And high risk, we have Palantir, Facebook, SoFi, Fubo, Corsair, and Nano Dimension. And I would just split the money evenly and just wait to see how it does over the next couple of years. Not even look at it, pretty much. But yeah, those are the 3 different portfolios I would do with $1,000 if I had to start over again with $1,000 today. But yeah, what would you do? And if you would do anything differently, let me know in the comment section below. Make sure you leave a like and subscribe on this video, as it really helps with the YouTube algorithm. My name is Zach. I'll see you in the next video.